Alright, we're back here for another video. I want to talk this time about this ridiculous buildup now of worry and concern about the U.S. losing its AAA credit rating. First of all, let me start off by saying rating agencies, Standard & Poor's, Moody's, Fitch, they're a joke. They're idiots. I mean, these are the same rating agencies that rated all of the subprime toxic assets AAA. But let's talk about this downgrade. First, just as a little aside and a little history, let's look at what happened back in 2002 when the idiot rating agencies did the same thing to Japan and basically downgraded Japan to the level of Botswana, the West African nation. And what happened? Japan at the time, or rather I should say, its debt ratio, debt to GDP ratio is now something 180 to 200%. It still enjoys some of the lowest interest rates in the world, very close to zero. Its currency is still very, very strong. Nothing happened. Absolutely nothing happened. You would think that by now these rating agencies would just take a step back and try to figure out, just, scratch your head a little bit, how come the downgrade of a sovereign nation credit status, a nation that spends in its own currency, and where that currency is not backed by gold, where it is non-convertible, and where it floats freely, there is never, ever, ever a risk of a payments crisis. Now, maybe there might be a foreign exchange risk in that. You might see, in some cases, a decline in the foreign exchange value of that currency. But there can never, ever, ever be a payments crisis. In other words, where a situation where they can't meet their debts and obligation for a nation that spends and borrows in its own currency. Impossible. It's not backed anymore. We're not on a gold standard. They never even consider this. Nor has there ever been, the intent not to pay. Look, let's look back in 1994 when the Congress, led by Newt Gingrich at the time, shut down the government. Remember that? There was this whole hullabaloo about not wanting to raise the debt ceiling. They ended up shutting down the government. Gingrich orchestrated this whole thing to make a big statement. And essentially at that time, you would have seen, because that was a de facto, at least for a short period of time, should have been, right, a de facto default. There was no collapse in treasuries, there was no dollar collapse. And then when the whole thing was over, the government said, okay, Congress by decree said, guess what, now we're going to raise the debt ceiling. So theoretically, or not even theoretically, in actuality, the government ran out of money as defined by how much it says it's going to spend. And then what did it do? It said, okay, well now we decide to spend more. The money didn't somehow come in from somewhere. They didn't tax everybody in the United States to suddenly get in that extra amount that they needed. By decree, Congress just said, okay, now we raise the debt ceiling by another, whatever it was, $500 billion, and boom, you start spending again. This is the point, and it should be so obvious to all these geniuses out there on Wall Street, and it should be obvious, I'm sorry folks, but it should be obvious to everyone, because this has been an ongoing situation, and for so long these debt doomsday people who have been calling for the end of the world, and the dollar is a loss in status as a reserve currency and a downgrade of the debt. And guess what? Not only did they downgrade Japan, nothing happened. Nothing went to that. Nobody went to that party. Nothing was going on there. Not only do we see this every several years in the United States, where Congress runs out of money, essentially, by definition, and then says, okay, guess what? Now we have some more money. And they do. They just keep on spending. In 1971, when Nixon took us off, think about this, because this is pretty interesting. In 1971, when Nixon took us off the gold standard, when he closed the gold window, that was also a de facto default. A default on America's obligations. Did we collapse? Are we now living in tremendous poverty? No. Our standard of living now is higher than it was back in 1971. So all this calamity, all this craziness, all these predictions of dire and imminent and terrible financial destruction that will come about, look, there's going to be a negative reaction. We know that because everyone is going to panic. People will be shorting treasuries. People will be shorting the dollar. But as soon as that panic subsides, things will just recover right back to the point where they were prior to this debt downgrade, whenever it happens. And it's going to happen. You know it's going to happen because the idiots at S&P and Moody's and and Fitch, these rating agencies, they don't know what they are doing. They are living in what we say here all the time on Mike Norman Economics, soon to be Pitbull Economics. They're living in the wrong paradigm. So get ready for a way for you to make an enormous amount of money once this happens. And you might want to ride the treasury market on the way down, but as soon as this, remember that movie Trading Places, you know, where Dan Aykroyd and Eddie Murphy stood there in the pit, and by the way, that was filmed right on the exchange where I used to trade, and some of those guys in that scene, I know them because I used to trade with them. Remember that scene? It was a great scene where everybody was panic selling, and right at the bottom, Eddie Murphy, Dan Aykroyd turns to Eddie Murphy, says, "Now," and Eddie Murphy says, "Now, start buying. Buy, 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 buy." And remember how the movie ended up? There's kicking back on their yacht in some beautiful Caribbean island. That's what we're all going to be doing, folks. So keep watching these shows and you'll be economically educated. This is Mike Norman. See you later.